So this is a very important video. Filters. We will talk about filters. How do we look at the stock market and filter the entire stock market to have a list of stocks on which we can check the weekly time frame charts, because you have taken a decision to trade only the weekly charts and you only want to take positional trades. So before you do that, you need to be able to filter the stock market. And what better website than MarketSmith to do that? So in this video, we will actually practically create a filter on MarketSmith from scratch. And I would imagine if William O'Neill was in India right now, looking at the Indian stock market, how would he have filtered stocks through the MarketSmith website? That is the question that I asked myself. And the answer to that question is this video. Based on what I have understood from his interviews, from Mark Minervini's interviews, and whatever study and research that I have done, I can make a reasonable guess as to how he would have filtered stocks in India if he were in India right now, looking at the current market conditions. Okay, so let's go to MarketSmith websites. I already have a breakout filter here. Directly go to this site. Now you see there is guru screens here. If I click on William O'Neill, okay, there are 11 stocks coming in this filter. But this filter is a very uh, strict filter. What I have understood by reading Mark Minervini's books and William O'Neill's books are they were looking at stocks by not putting in too many filters. They would look at a broad range of stocks that satisfied some basic non-negotiable criteria, and then they took it forward from there. For example, see, just because a stock comes in this list doesn't mean that you have to buy. You have to do further analysis. Okay. So, example, let's say you use the EPS rating as the filter. I personally don't use the EPS rating. Let's say you use the EPS rating as the filter and you want a minimum EPS rating of 80 or more, right? Now, what if the EPS rating of a stock is 79? Now, that stock will not show up in your filter. However, that stock could have 3/4 of accelerated earnings growth, 3/4 of accelerated sales growth, more than 25% uh, sales growth quarterly, more than 40% EPS growth quarterly. Is it possible? Of course, it is possible, right? Chances are very low that it will not come in the filter. It is likely to come in the filter. But what if because of one point you miss? So Mark Minervini says you only need one violation to get rid of the stock. So he puts a very broad filter. If you notice the trend template of Mark Minervini, he doesn't even use the fundamental criteria. So basically, he's looking at companies, whether it's profit, loss, doesn't matter. Okay, whatever is the earning growth, sales, that he will check manually. So we will use that approach. It's a blend of O'Neill's approach and Mark Minervini's approach. So let's go to breakouts and we'll start creating a filter based on O'Neill's and Minervini's philosophy. So I will click here. So these are my positional and swing filters. This is what I do for daily charts, but I will create a fresh filter for you for the weekly charts. Okay, so I click here. Let us dedicate this filter to O'Neill. So William O'Neill. Okay, WON, William O'Neill. So MarketSmith ratings. The first thing I will tell you, he would go to relative strength rating greater than or equal to 70, because in his book he has clearly written that never buy a stock which has a RS rating of less than 70, which means what? He is open to looking at stocks which have relative strength of 70 or more. So that's the first filter for you. Okay. Next, in his book, I think in the later part of the book, he talks about institutional demand. Okay. Majority of the leading stocks of the past had a buyer demand rating of A or B. So he would select this. Okay. He would begin with this. Group rank. In the part of the book where he discusses industries, he has clearly written that out of 197 industry groups, the stocks that fall in the top half of the industry groups by 6 month performance, they generally outperform stocks in the bottom half of the industry groups in terms of their 6 month performance. So that is why out of 197, my guess is he would go with stocks which have a rank of less than or equal to 100. These are basic filters which even I use. Okay. Group rank less than or equal to 100, A and B buyer demand, price trend 70. He would look at these factors on each stock that he is buying, but I don't think he would put these as filters. Okay. Next, technical. In the book, it is clearly mentioned that market cap is not a criteria when he is looking for stocks. Okay. In fact, he says the smaller the market cap of the company, the more is the potential for the company to go up. Okay. Because even small amount of demand can propel the price of the stock. That's his philosophy. Okay. Current price, obviously, he would not buy penny stock. So let's make it more than or equal to 20, which I use. Even the Guru screen O'Neill filter uses this. Again, average rupee volume should be minimum 1 crore, the 50-day average rupee volume. So I have selected these two. Average daily volume, I personally go with minimum 200,000 shares traded per day. But I don't think William O'Neill would filter stocks based on average daily volume. There is no such reference given to average daily volume in both O'Neill's books and Mark Minervini's books. If you look at the trend template of Mark Minervini, average daily volume criteria is not there. I personally use this in the Indian market because my experience has been if the average daily volume of the stock is 200,000 shares or more, there is less volatility in the stock. That has been my experience. Price versus 52-week high, definitely he would use greater than or equal to minus 25. So price should be within 25% of 52-week high. I think he would use 15% here, but I'm using 25%, which is consistent with Minervini's approach. 52-week low, he doesn't talk about that in the book. This is coming from the trend template. Volume versus 50-day, not important. Daily price change, not important. Yeah, price versus 50-day, he would prefer stocks which are above trading above the 10-week simple moving average, which is nothing but the 50-day simple moving average. He would also prefer stocks to be above the 200-day simple moving average, which is the 40-week simple moving average. So he would be looking for stocks which are in a confirmed uptrend. Okay. Then forget about all this blue dot and all that. He would check manually. That is my guess. Sales. Well, if the sales growth of a company is declining, let's say minus 25% sales growth latest quarter, he wouldn't even bother looking at the stock. So let's just assume that he would demand a minimum sales growth of double digit quarter. Okay, so at least 10% quarterly sales growth latest quarter. Okay, at least double digit growth in sales. And EPS latest reported quarter, this is a no brainer. It's clearly written, it has to be minimum 18. Okay, that is why he might filter stocks with this criteria, but he would not use EPS rating. That is my guess from understanding what he has written in the book. I would say he would use a broad set of filters, these three here, then 1, 2, 3, 4, 5, that is more than enough, and a couple of fundamental filters. That's it. Whatever stocks come in this filter, I think he would be open to exploring those stocks and he would pick and choose from those stocks. He wouldn't go to pattern recognition and market indices. This are irrelevant. So let us save this. So you understood the logic I am using behind each filter. As long as you understand what you are doing, you can play around with these filters. Okay, but this is the basic non-negotiable criteria, right? For every positional trader who wants to trade properly. Now, save the filter, apply the filter. Okay, let's see how many stocks show up in this filter. So 103 stocks. Good enough. So how much time does it take for you to open each of these uh, windows, okay, and check the weekly chart. Okay. So although you are taking a trade on the weekly chart, I would suggest that you would do this filtering daily on a daily basis, because O'Neill was looking at the market conditions on a daily basis. So suddenly when the market condition turns to confirmed uptrend, he would start looking at stocks. So he was looking at stocks on a daily basis. So although you don't have time to spend on your laptop or your computer during the market opening hours, okay, or when the market is open, at least after you come from office, you should be spending at least half an hour, 15 minutes to half an hour, depending on how quickly you are able to skim through all of these stocks. Most of these stocks would not be forming a base. You only have to select those stocks which are actually forming a base, whereas there is actually a green dotted line, which I discussed in previous videos. There has to be a base, there has to be a green dotted line, properly named base, properly named pivot point, and preferably the price is within 10 to 15% of that pivot point, so that you can keep an eye on the stock during the week. Is it coming closer to that point? Okay. So don't consider this as a rule. Just open all of these windows. 100 stocks wouldn't take more than 15 minutes. Okay. You can quickly go through. Some of these stocks might have already broken above the pivot. So those don't should not even come under your consideration. Only those stocks which are forming a base, where the base is clearly marked, the pivot point is clearly marked, the blue zone, the red zone, and the green zone is clearly marked. Only those charts you have to look at. How much time does it take? Maximum half an hour. And the reason why I tell you to do this daily, in spite of the fact that you don't have time, is because see, this number changes daily. Today it is showing 103, tomorrow it might show 123. So you don't want to miss out on those 23 stocks. Today it shows 103, tomorrow it might show 75 stocks, which means broadly the market has started to weaken. So you have to check this number daily. You have to check these stocks daily, but you focus on the weekly time frame chart. You don't go through the daily time frame. So filtering should be done on a daily basis, which William O'Neill used to do. So you can't escape that. You have to find time, no matter how busy you are. You have to find half an hour to skim through all of these stocks, and more or less the stocks will not change drastically. It will remain 75% of this list will always remain almost the same. Okay. 25% maybe keep churning. But you understand what I'm trying to say here. Filter stocks using this filter on a daily basis. Check each of these stocks on a daily basis, the weekly chart. Do the 5 kinds of analysis only on those stocks which are forming a base, where there is a clear cut pivot point marked by the MarketSmith website. I can't open these windows for you, because by regulations, I'm not allowed to discuss individual stocks with latest 3 months data. Otherwise, I have opened some of these stocks for you and I would have illustrated it with examples, but I can't do that here. So please understand my situation. That is why I am uh, trying to explain to you. Open these stocks, check their weekly charts, find out those stocks which are forming a base where there is a clear green dotted line, and then do 5 kinds of analysis of the stock: the liquidity analysis, the comparative analysis, the technical analysis, the fundamental analysis, and the market analysis. Once you are done with that, decide whether you want to buy the stock or not. Decide what position size you want to take or not, what position size you want to go in with. Then, as the stock moves into that blue zone, take the position, execute the trade, put the stop loss at the red zone, and manage the risk. That's all you have to do. It's very simple. Okay. Rewind this part which I explained to you. Maybe take notes. It's very simple. Don't make it complicated. You don't have to memorize patterns. You don't have to mark patterns. You don't have to do any extra work. Everything is here. Okay. Just put these filters. It will help you. Okay. So that would be my understanding of how O'Neill and Mark Minervini would approach the Indian stock market with filters. They would keep the filters broad, and then they would accordingly look at individual stocks which are showing some strength. Of course, they would look at average daily volume to assess how much liquidity risk there is in the stock. Of course, they would look at red flags on stocks. If there is a red flag, probably they wouldn't buy. Okay. So, this is my understanding of their trading and investment philosophy. Hope this video was helpful. For you, if you are a weekly chart trader, if you only want to take positional trades, this is the base minimum criteria you should be putting in MarketSmith filters. Thank you so much. So I think this was part 4, 5, I don't remember. But this video series, multi-part video series will continue. It's not over yet. Okay. We still have to discuss the fundamental criteria. Okay.